This is a Shoesmiths podcast.
So, welcome to our podcast. I'm Judy Fawcett. I'm a partner in the real estate team for Shoesmiths Leeds office. I deal with investment and development in real estate with a focus on residential investment. I'm delighted to be joined today by Andrew Wells, partner and head of office for Leeds for Allsopp, with extensive experience in all aspects of residential investment and development. In this short podcast, I'm going to ask Andrew to tell us a little bit about where he sees the residential investment market at the moment, bearing in mind COVID. And then he's also going to tell us about some of the more active parts of the market. So Andrew, welcome.
Thank you.
And thanks for agreeing to take part.
No worries.
If I could ask you first to just give us a bit of an overview of what's happening in the markets at the moment around yields, rental, occupancy and the like following COVID. And then if you could just tell us a bit about how you think that might be affecting investor appetite and prices.
Sure, yeah. So in the PRS, the private rented sector, things are holding up reasonably well. We're finding that tenants are paying their rent by and large, that we've had very few requests for rental holidays or rent payment plans, deferred rents and so forth. And when those do come through, we as managing agents try to ensure that we have an evidence base to agree any kind of rental plan. And typically speaking, we're finding maybe 1 to 3% of tenants are asking for some kind of concession. And when we see the evidence, it's turning out to be about 1% actually get something. And that compared with other commercial sectors, retail, offices and so forth, is a huge plus and vote of confidence in the sector. And it's probably why residential right now, I'm not talking about the housing market, I'm talking about residential specifically, is seen as, one of the most robust sectors in the market. Occupancy levels are pretty high. They stayed high because, frankly, people couldn't move. But even since the housing minister announced that people could move again, we haven't really seen much churn going on in the properties that we manage. And therefore, yields have held reasonably firm. I wouldn't say necessarily that they've stayed at pre-COVID levels. They've probably moved out 25 to 50 basis points. And the reason they have moved out is because people are worried, investors are worried, not necessarily about the rental income streams, but about the underlying bricks and mortar house prices. And we've heard forecasts from various commentators about how the housing market might fall in value from sort of minus 5% for the rest of the year up to sort of minus 13%, depending on who you listen to. But, and it's a big but, we have found in the last 8 weeks or so a lot of new entrants into the private rented sector. And these are people generally who haven't been in the residential PRS before. They're commercial investors who are seeing residential as having sustainable income streams compared to what they have at the moment. They're finding other asset classes, the stock market and so forth, savings rates, unrewarding or difficult to predict. And therefore, if you've got a block of flats, 24 flats in a good, sustainable, lettable location, we're getting really good interest when we take them to market. And there's a decent smattering of new entrants looking at
it. Is that sort of all over? Is that nationwide? Are there particular locations that maybe are attracting investment more than others?
Yes and no. I mean, most residential investors want a metropolitan urban environment, so the big cities are always going to be in demand. But for example, we put into the market in middle of May 10 blocks for a major investor. They're between sort of 1 and 5 million in individual size. And they're on the Wirral, they're in Sheffield, they're in Ipswich, East London, Huddersfield. So, quite
All
a mix
over.
of all over the place.
Yeah.
And we had to hold a best and final offers situation. For those 10 properties, we had 39 individual different bidders competing for those.
Fantastic.
Um,
that is very positive.
so that works really well. Yeah. So they haven't gone through yet, and it's not a done deal. But I think the other thing underpinning the residential investment sector at the moment is that lenders are still keen on this sector. So there's debt available.
Yes.
Still, which works really well. And the material uncertainty clause, which the RICS asks valuers to put into reports and is mandatory, this says the valuer has a bit less confidence in his value than normal, has already been lifted for build to rent developments. And my bet is that for mainstream residential investment, PRS, that isn't necessarily build to rent, but it's discrete blocks for rental, it won't be long until the material uncertainty clause is lifted on those. If I was a betting man, I'd say within the next 2 to 3 weeks.
Yeah, it was a huge positive move forward this week to get that lifted. I think in this sector, as you say, really helpful. I had a number of deals for banks, lenders, which were stuttering, and now are moving through a pace again, which is very, very positive.
Yeah.
Great. So the other thing I just wanted to ask you about really is what about other elements of the residential investment market? So how have auctions been going, and what about ground rents? How are the markets seeing those at the moment? And again, what would you say is the sweet spot at the moment? What's everybody looking for?
Well, I'll answer that question first. Perhaps everybody's looking for sustainable income. So, if in an ideal world you could get a 10-year lease to a housing association, no breaks, you'd be killed in the rush. but those, there aren't many of those around. So the next default down really is very lettable locations where the rental income stream, you're always going to, rent flats. You might not get so much rental growth in the future as you would now, but that kind of asset class will perform well. And in terms of lot size, we're finding that things between about 1 million and 5 million in individual capital value captures the smaller, high net worth individual. It captures some overseas buyers, it captures some institutions, and it captures the corporates, and therefore, that's your best basket.
And are we still seeing a lot of confidence from the overseas investors in the UK residential investment market?
Yes and no. They'd like to invest, and obviously the weakness of sterling is helping, but they like to view and touch and feel, what they're buying. And I talked about 10 blocks we marketed earlier this month. We had video viewings for people to see, and that was helpful, and it obviously got 39 people interested. I think overseas investors, if they're going to put 2 to 5 million in, actually like to walk around it and see what they're buying. So that's holding us back a bit. You talked about auctions. I mean, we all SOPs have been running auctions for I was going to say 100 years. It is, since 1906. And we had to adapt very, very quickly to lockdown. So we've gone online, as have other auctioneers, and it's been remarkable how successful those have been. So since lockdown, we have sold, this is just our auction house, we've sold £140 million worth of kit in commercial and residential terms at a success rate of over 80%. In fact, we had a smallish auction on the 16th of June, and we sold 86% of the catalogue.
Wow.
Okay, pricing has been adjusted slightly to try and get people interested, but the eventual bidding is strong. And our last residential auction on the 28th of May, we had 1,300 individual bidders for that online auction over one day. What were people wanting to buy? Well, let property, let residential, ASTs in good locations. Housing associations are selling up and still need to maintain their capital flow of income through sales. So vacant sales has gone well. And then you also talked about ground rents.
Sure. Yeah. How's that market?
Well, before lockdown, we had a bit of a shock with ground rents because you probably know the government are intending to legislate in this environment, and people were a little bit iffy about where the government would go, particularly on things like lease extensions and enfranchisement. But even in light of that and COVID, ground rents, which are secure, have been, I think we've sold every ground rent lot we've offered at auction, and pricing has held up. There was a block of flats on Battersea Bridge which was offered at auction. Really, frankly, unattractive review clause. It was once every 50 years the rent doubled, and we got I think it was 28 YP for that. So a multiplier of 28 on the income, which is what we would have got before lockdown.
Yeah, absolutely.
So it's held up really well, and it's a safe haven in really uncertain times.
Yeah, and residential investment seems to be increasingly a safe port in the current storm, which is good for business. Good for business. So that's probably all we've got time for today. But big thank you, Andrew, for your thoughts and for your time, and thanks to everyone for listening. So this is one of a number of podcasts that we're putting together. So please do look on the website for any others that might be of interest. And lastly, just to say, if there is anything that we've talked about today that you're interested in talking about further, or if there's anything else Andrew or I can do to help you with anything you are dealing with, then please don't hesitate to get in touch.